So what we've got here is a complying fund with 2 members in accumulation phase, no pensions. And we've got the accounting on the June 2025 column, and we've got the tax for the same year in this column. So you can see it's just the revaluation of the land that's not taxable, and also not deductible is the tax on the earnings. So in terms of the tax on the earnings, we've got, so that's giving you your calc there. And then we've got our employer contributions, noting a difference between this and if you've used BGL before, we're not reflecting the contributions in the revenue section. They're just purely coming in as a contribution, members' contribution into the equity section. So we've got those, and then the tax on those, well, there's the liability. But the way that we've done it is you'll notice that in terms of the way that we've got the profits, these are profit after tax because we're reflecting the tax on the earnings separately over here, and that sort of mirrors what we're doing here. So we've got, there and there, that's the 15% there, right? Whereas there's that 15%. So hopefully that's pretty straightforward. So let's just save that. And then I'm going to come along and import so we've pretty much got exactly the same thing here. Now what we're going to do is just double check our mapping. So notice the land and buildings accumulated, land and buildings revaluation, and we've got an account for that. So here the liabilities, noting the supervisory levy kept separate so we could see it all clearly. And in the equity, we've got our current earnings, which is allocated to allocated earnings. And we've got our employer contributions, opening balances, we don't have any, tax on the earnings and tax on the contributions. And then in the revenue, interest, the rent, noting how it's nested down in rental income under investment income, and the comprehensive income is, for whatever reason, we ended up calling the revaluation account as comprehensive. But anyway, that probably needs to change at some stage. You can actually change it in the report yourself, however you like. Here's those all the accounting expenses mapped, including the tax on the earnings. So now let's go and have a look at the tax form. So I should select the sections that are relevant, including the contributions. So we've got assessable contributions there, that's the members coming in. Now you'll notice it maps in accounting but not tax. So it expects you just to come and put in some of the values. And the same for the deductions. You'll see the little number there, right? So there might be some tax differences to these accounts. And I guess that's just a very easy sort of fix. And of course, later on, we'll certainly consider having a little bit more auto-filling here in terms of working out the tax. If we know a little bit more about the fund, we could automate a whole lot more of this. So what have we got now? We've got our income, we've got our assessable contributions, we've got our deductions, and the fund is a complying fund. Okay. 766,165. So if we go back to here, 766,165, right? So we've hit the nail straight on the head. Now we've got to map in the members. We've got Anna, and we're going to import for Anna. Okay. And we're going to import for John. must have missed something on Anna there. So we've got Anna, and we missed the opening balance. Okay, so what do we got now? 694,338, and if we have a look back in where we started, 694,338, right? So now we can go to our custom report, and we've got the free version, and we use the LodgeiT, it's a non-trading entity, for 2025. You change that name however you like. And here we are. So we don't need a cash flow. We've got the director's declaration in here. Now, noting that we haven't got a director specified, so that's where you'd want to come and make sure that the John Doe company relationships. Now, this is done wrong way around. Add. So this is John Doe, who is our director. So now we can go back to Doe Superfund. Now we do need to really kick this again because we've just fixed that director, right? So let's just put it in again. So we should have our director in here down now. Yep. Okay. So comprehensive income. Okay, 29,351, and we agreed that it's shown before, right? So if you add back equals that plus the tax on the earnings, just don't forget it's 29,351, right? So 29,351, and then if we go to, we can probably move these around if you like, but actually let's have a look at the members' profit allocation. So there, what we're essentially doing, and this is the key to why we've done it the way we've done it, is because we're relying on frameworks that were built previously, and this is the way the framework works. So, you know, this is the way that it makes sense to put it together, the way that you're seeing it. So anyway, 27,948 after the tax is included in there. And the way that that obviously all splashes out, we've seen that already, in that in the balance sheet, let's take out that cash flow. I thought I did that. 694,338, right? Now that opens up as that. We know exactly how that came to be. And if we want to see what's in there, we can. So the final profit allocation, this is not mapped out. So the reason for that, okay, I just manipulated some numbers in there and they popped through. So 29,351 after tax, 27,948, and we understand how this then comes into shape. So it's coming into shape off the 676, right? So we can see that that is how this is coming in. Hopefully that all makes sense. Let's have a look at what it looks like when it's completed. So financial position, tax, members' equity. Of course, if you like to change some of this, you can change it in the templates, and then down into how this has been appropriated out of the profit. Just a quick note that what I've done is I've just changed the naming conventions on these, so they line up with what you'd expect in a super fund. So it's easy to do. You just open the financials, click in, and make your changes.